Hi, this is Kerry Artek with Wicked Stocks bringing you your daily Apple report for Friday, September 29th, 2023. Before I click on all the charts, as usual, just want to encourage you to please click like if you haven't already. Please share the content with friends and colleagues. Subscribe to the Wicked Stocks YouTube channel and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like the Apple report, daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs, weekly analysis in the S&P 500 index, the NASDAQ 100 index, the long bond ETF, that is the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves at least on those stock picks. This week alone, we put out two videos, two stock picks on NVIDIA and AMD. And so if you're interested in taking a look at those, you can do so for free. Signing up for wickedstocks.com provides you a 5-day free trial up front. So you can look at the stock picks that we've done over the last few weeks, all of our daily analytical videos, weekly analytical videos. And if you don't like what you see, within 5 days, you can bow out at no cost to you whatsoever. So check out wickedstocks.com. On with the charts. Big picture, work our way into the day itself. We did come very close to testing that 167.83 channel bottom this week. We've got a modest bounce off of that area. And, on the that inside channel I can show you here is 164.41. So you can see lower right, that is an annual containment area, able to contain selling through next year, above which over the next 1 to 2 months at the most, depends on if we get locked into a consolidated framework for an extended period of time, but we could run our way out of here, and I'll show that in a moment what that scenario is. 191 even expected over the next 1 to 2 months, and 227.68 in reach by this point next year or sooner. That sooner would come as if we closed above, say by the end of the year, 191 even. Then we're probably 3 to 5 months away from continuing up into the 227.68 area. That would put us into the second quarter of next year. So that it could be the sooner than later. That is the big picture. If we were to close today below 166.41, and you really should throw in a 1% margin on that. I don't have that number in front of me right now, but I will give it to you to the very exact tick. And yeah, 166.74. So I'm sorry, 164.75. 164.75. I don't have it here at all. It's very close to 164.54. So, if we close around that level below 165.10, that is the 1% violation of 166.41. That sets off a meaningful sell signal that could play out well into the first quarter, into later next year. I do think, though, on the way down, we have a rising 2/3 speed line that becomes a 2 to 3 week target if we close below 166.41. On the way down, 163.80, you can see on the lower right, I've got that as a session containment level on the way down to what would be a target at 158.26. This speed line projected off the January low, able to contain at least weekly, if not monthly selling pressures when tested. And this is our meaningful downward pivot point into Q1, even Q2 of next year. I'll give you those targets if that looks to occur. But for right now, this is your bottom picking territory, 166.41 to 167.83. Better shown here. So we are above it. And in fact, let's talk upside today. Let me take a look. This is an image I like to show. 171.98 is our session containment level, able to contain daily highs. It also is very close to this August low of 171.96. I could draw a straight line. It would intersect right at that channel top. 171.98, able to contain daily buying pressures, below which we can easily test 169.94, quite possibly 167.83 again intraday, which once again part of a range down to 166.41 that can absorb selling through the rest of the year and quite possibly through all of next, above which a long-term target remains at 227.68 and climbing. And what I mean by long-term is like over the next full year of activity. So let's talk about the possibility of Well, if we get overnight strength and we open above 171.98, I like the opens. Many times there's just sort of a don't look back, peel away element that plays out. Then we've got a little bit at 173.54, but honestly, if we push, especially if we open today above 171.98, we could continue higher to the 176.93 to 177.40 region. And this area you could also say is a 1 to 2 day objective with a lower volatility dynamic if we were to close today above 171.98. So closing above 171.98 does skew the market upward into early next week. The next 1 to 2 days then likely to test 176.93 to 177.40. Combination descending 1/3 speed line and new channel top that can absorb buying through next week. And once tested, we can quite easily fall all the way back to this zone of long-term support in the 166.41 to 167.83 area. So I will say that if we test this 176.93 to 77.40 region over the next few days, you could reach for 166 or 167 out of the money puts that don't expire for at least a week. You might go to a couple weeks out on that. We could trade, and that's also the 3 to 5 day swing trade. We came off of, yes, actually, we did officially test 167.83 on Thursday. The low was 167.62, so that has been tested. We came off of it a bit. And so having done so, you can consider the 176.93 to 177.40 area a 3 to 5 day target. Make that 1 to 2 if we close above 171.98. And having tested long-term support at 167.83, I'd mentioned earlier how this area should be considered a 1 to 2 month objective, 187.19 to 190.33. And if we close today, and I don't see it happening, but if we did above 177.40, we're just 2 to 3 weeks away from pushing into the upper 180s. This 190.33 descending channel top is in the 180s next week, able to contain buying by that point in time into November, and we could fall off from there. And as I said earlier, if you're looking at the big picture, it would be a settlement above 191 even that would lend itself toward meaningful, longer-term, and aggressive bullish continuation over the following 3 to 5 months to 227.68. So let's go back to this chart here. Holding below 171.98 allows, once again, 167.83 to 166.41. And if we do close today below 166.41, that should be by a 1% margin. I'll let you do the math, but once again, I'll just tell you right now it's 164.75. Closing today, Friday, the week itself, at 164.75 does indicate the upper 150s once again over the next couple of weeks. 158.26 just might contain selling through November, let's say. This descending channel bottom, they all come together over the next couple of weeks. And so we'll see what the timing is of everything. If these converge at the same time that they're being tested, or if the market tests these areas while they're converging, they'll need to be bumped up to probably more of a solid 4-star support area. But we'll cover that at that time if need be. We're 8.5 minutes. I'm going to leave you with this chart here. This says it all to the upside. I've covered the downside pretty well. Please click like, share, subscribe. Check out wickedstocks.com. Check out that NVIDIA and AMD analysis we did this week. I'll be back Sunday afternoon with Monday's Apple, and you have a great weekend.